That's a play.
To be fair, it's been a play or been in talk, should I say, and whispers of it for many years now,
Yeah.
since before COVID. COVID, we had that crash, which sort of instigated it, being that the COVID and coronavirus instigated the crash. They turned the money printer on. Interest rates were down at pretty much near zero. Everything turned back up, all new time highs. Um, and now it seems like we're starting to stagnate again. We've got interest rates risen,
Yeah.
inflation at all time highs. We've got a lot of wars across the world. We've got a lot of political distress as well. Um, and it seems like there's something on the horizon. There's a lot of talks of the US dollar collapsing and
Yes.
the end of that empire.
Yes.
What are your thoughts after being in the markets for so long and seeing different rises and falls from different stocks, for example, and different sectors of stocks? Like right now, we're in the sort of like AI tech sort of sector and the boom there. Like, is anything worrying to you when you look at
Yeah.
these
I,
markets?
I mean, yeah, absolutely. That's why you saw the last 3 or 4 days doing what it did. And after it made a high, a couple of weeks ago, it made an all-time high. You're not talking a long time here. Warren Buffett is, that's what smart people, deep-pocketed investors do. They're sitting there with cash. They buy at bottom, and then they start peeling off millions of shares in a questionable environment, which is what he does. And I assumed he was doing that. I didn't have to read it, tell you the truth. And it doesn't really mean anything that he's doing it because I assumed he was doing it because that's what smart people do. When they're throwing it out the window, smart people are there to catch it. And when they're coming up the other way, smart people are there to let it happen.
Mm,
So when was he doing this? At the height, near the height of the market.
mm.
Does it matter to him? Is the market going up another 20%, 10% in his face? Probably not. Probably not. Was it going up another 5%? Maybe. But it doesn't matter to him. He's printing money by liquidating these positions. And, one of the smartest investors on the planet is Stanley Druckenmiller, who sold all his high tech names and bought the IWM. All right, the IWM, lesser names, less growth names, potentially more growth names. Actually, that's why he bought it.
Mm.
The IWM lists companies that are 30%, 7% of them do not make money. But what they do is have research and development. And if you buy a basket of those stocks in an ETF like that, one or two of them can hit. All right. And that's what he did. Very smart dude. But as far as the concepts on Wall Street will never change. We talked about a number of times during this conversation about selling bottoms, selling
Mhm.
bottoms, selling bottoms. Well, in essence, or buying tops, buying tops. Well, the smart people of the world, the deep pocket, they know this, okay? So when people are puking and the market is puking, they have to place their bets
Mm.
and they have the staying power to hang on until it turns around. And when they're selling up here, he's printing money. So this goes on over and over. It'll never change.
Do you feel like when everyone's talking about recession, that's obviously not when it's going to take place. It's normally when it catches everyone off guard, when peak euphoria, essentially. So like every time we make a new all-time high, everyone expects us to then suddenly crash. It keeps doing it over and over again
Correct.
until the point where no one questions it anymore. It's
Correct.
just this is going to keep happening.
Perfect.
That's when it's take place.
Perfect. I stood up and watched the dot-com era the same way. Okay, you shook your head. None of those companies ever made money. They didn't make money at the time.
Mhm.
It didn't matter. And every day I shook my head. I said, you got to stop this. My customers shook their head. They couldn't believe it. They were getting run in all over the place. What's this? What? The impetus on the money is capable of this until, as you just eloquently said, until it's not.
Mhm.
Okay. And then it gets ugly. Okay. And I firmly believe in the last 3 weeks, okay, what were they talking about? What word did you hear? Bubble. It's a bubble. It's a bubble.
Mhm.
Want to know why the market made new highs, all-time highs 2 weeks ago? Because everybody was talking about a bubble.
Yeah.
Exactly what you said.
Mhm.
That's the way it goes. Simple, common sense,
Mhm.
man.
What are your thoughts in terms of? I know that you were part of history with the New York Stock Exchange. You placed the first trade, if I'm not mistaken. Was it executed via? I don't know if it was electronically. Something you
Buyback,
Mhm.
program trade orders.
Program trade orders. That's right. Yeah.
First ever on a New York Stock Exchange. First ever. I had 6 million shares, give or take, of 60 S&P names to buy, market on close, when there was no supply. No supply. Stack of orders like this, no supply. Buy 100,000 mobile, market on close. Buy 20,000 IBM, market on 20,000 IBM, right? 20,000. 500 shares of IBM in those days to buy market on close could take the stock up $1.50 or $2. 20,000. 60 S&P names. I had 25 brokers, 7 of which worked for me, 25 of which were just, my friends that were representing. And I'm staying in a separate location, handling every freaking order. Okay. And I said, wait a minute, this is not going to work. It's not working. There was no supply. The place was in a panic. The chairman of the stock exchange, the directors, the board coming down. Are these real orders? Are these real? I said, fellas, what do you mean are these real orders? Yes, they're real orders. Oh, yes, they are. Oh my God, what are we going to do? We're going to do nothing. Get away from me. I'll take care of this. 25 brokers running all over the place. Finally, I realized that the traditional way to do this is not the way to do it. So what did I do? I called the largest, the biggest firm on Wall Street who were clients of mine and who paid me to trade IBM for them $15,000 a month in 1980, 1981, a lot of money, just as a retainer. But they had the most successful person that headed a trading desk and the most powerful person on Wall Street, excuse me, named Stanley Shopcorn. And Stanley Shopcorn was the head trader of Solomon Brothers. And Solomon Brothers, noted as a bond house, but they had a huge equity desk. And every piece of merchandise that came down the pike to get placed called Solomon Brothers. I said, I need somebody with strength here. I go to the phone. I say, give me Stanley. Stanley, Richie, what's happening? Stanley, listen to me. I have bop to buy. Okay, so, call me back. This is what he said. He says, well, call me back and we'll write somebody. I said, no. There's no way. Cannot do that. There's none of that. He says, give me my clerk. Gets his clerk and he says, give Richie sell orders up to the amount of shares that he has to buy at his discretion to fill every one of those buy orders. And that was an incredible day. And we just went up, talked about the specialist book, find out where supply was, and then we filled it in with Solomon Brothers proprietary sell paper and priced every damn one of them.
Wow.
Crazy.
Wow.
Crazy.
So like being part of that history, so like you being part of the history of being one of the first people to instigate a program trade. And how does that make you feel though? Like knowing that you're part of that history?
It was just incredible. I wish I had those original papers. I wish I really did. They'd be worth millions of dollars, but I don't. But how did it feel? It feels very satisfying. Here's a kid growing up in Queens with nothing. I didn't grow up with a poor family. Middle income people worked hard all their lives. Lived in a $12,000 house. I had everything that I wanted, which was really not much. And here I am dictating flow. It's the top firm on Wall Street and the top trader on Wall Street, basically. Not basically. You go look him up. Top guy. I mean, he's controlled everything. And here I am, one-on-one with this person, and he's giving me discretion over millions of shares. So how does it make me feel? It makes me feel great, man. It really does.
As it should. And, as part of this whole interview, there's so many gems that we've taken away. That's for sure. And to speak from the experience and wealth of knowledge that you've had, I know it's going to have a huge impact on traders out there. As we discussed, like people of, this audience, the retail audience of today, we've talked about like their issues being more so of rushing, their greed, their lack of focus. But when it comes to, we talked about sizing trades, right? We talked about handling size for yourself, but what would you advise to traders out there who are going through that scaling process themselves? They're going from, I would say trading a few $1,000s into the tens of thousands, the six figures, the seven figures, and a lot of them have these barriers when it comes to that psychology of being able to handle, new size, whether it's
Yeah,
new stop loss amounts, new
yeah,
take profits amounts, or new contract sizes.
yeah.
Is there anything that you can sort of advise them to help them overcome those barriers?
I would say something in a very profound manner here. If you find yourself in that position, stop and manage what you can manage, because it's not for you. You will make mistakes and it's going to cost you money. If you think you can fight through it, it's your prerogative to try it. But if you have a roadblock and you sense a roadblock because the chips on the table have changed, you may have to look in the mirror and say, well, maybe this is not for me, or you may have to just stand in one place. You know?
I think it's very fair. I think it's very, very fair. And it's interesting you mentioned about chips on the table. How close of the relationship between, say, poker and trading is there? Because as you mentioned earlier, actually, the similar thing where you need to know the personalities. Obviously, that was more so for the pits. But do you treat the markets even now in a similar fashion of trying to recognize the emotion within the charts, if that makes sense? Like if you're seeing a lot of a down movement, a lot of emotion just within the chart itself. Like when you're looking at the charts, you're seeing these huge red candles. Is that how you're operating? Are you looking at, okay, this is how the average trader is probably feeling right now, or the traders are out there? This
Yeah,
is what the flow may be telling me, and therefore acting accordingly.
yeah. I mean, listen. I made my living, and as of today, have learned under very stringent conditions how to control emotions and how to manage emotions. Um, Again, the size doesn't really matter to me. It doesn't. It means nothing. I can, it doesn't mean anything. Trading that kind of volume under those circumstances, with what the stock meant in the overall picture of the market, every trade, most of the trades during the day, I can recount and look at the percentages of every one of those trades and the decision process that takes place to pull the trigger on a specific trade. Yes, it does. So, and I believe that those decisions really are the decisions that control the decisions we
Mhm.
make in our everyday life.
Yeah.
Whether it's to stand on a curb, whether it's to take a step this way, whether it's to yell at somebody, whatever it is, there's a percentage in everything. So you talk about a poker game, there's a percentage in a poker game. It plays. Do I want to play? Do I want to go all in? Do I want to fold? Am I going to make a bet? Am I going to make a raise? Blah, blah, blah. But the stock market boils all that down. And the difference is there is no time. You have to make a split decision. And you make a split decision based on the time you put in. And being a student of the game, as I say that word again, you need to get to a point where your gut spits this out.
Mm.
And you can. You all capable of doing that, providing you have the right mentor. That'll tell you. Providing you have the right mentor,
Mm.
you're all capable of doing it. But the decisions that I make to this day are based on that gut feeling. I tell everybody, look at the rhythm of the numbers. What do you mean? I said, watch the quote and watch the size that trades. Watch it.
Mm.
That'll spit out scalp trades to you without looking at another thing. Yes, it will. You'll see the momentum go. You'll see it. So, those decisions are based wholly on mathematics. And I say, if you're a student of the game, your gut will start spitting out these moves. And
Mm.
you will see it. And learning from the way I learned it and and lived it, to this day it holds up.
Mhm.
It just does. So it's all about mathematics, man.
To finish up on the algorithm side of things,
Yep.
what would be your advice for people to start trying to observe, these algorithmic plays within the markets? I know
Okay.
you've described really well previously in terms of having sort of your range, knowing where your premium, your discount is, understanding your buy and sell stops within those ranges, and
Correct.
acting accordingly. Is there anything that we can elaborate on that at all?
You need to remember that algorithms are there to create liquidity and volatility.
Mm.
They have no mind. They have to go to an area. They don't just go to an area. They're programmed by, no matter what you say, it comes down to a programmer programming them, programming whatever technicals they put in, whatever the mathematics is that make up this algorithm. So it's not only the premium and discount areas, but when you see the Nasdaq going to a full number, coming up 20 or 30 handles, 19,200, all right, 200, 230, 240, 250, 270, 275, 280, markets rallying, 275, 280. You know it's printing at the main number. You just know it. And I know that those algorithms are going to make that print. But it's the same example could be made by any firm even number. Okay? Where is that? 10, 20, 30, 40, 50, 60, 70, 80, especially 50. You know, they sit and they want to go to those numbers. Why? We should spend a little time talking about algorithms going to option strike price areas. You know, we specialize in that as well because this market in its enormity, we gave the example, the positions in this market this day and age are multi-million share positions. It's not easy to put that kind of money to work. And they have to put it to work. It's their mandate to put it to work. Why am I giving you my money if you're not putting it to work? So they have to. So their positions are huge. Does anybody out there think that they just sit back and they buy and hold and smile and go home and have dinner with their wives? No, that's not the way this works. They hedge their positions as well. Where do they hedge their positions? For the most part, all right? Options. So these strike prices become huge. And the amount of puts and calls that sit at these strike prices, the algorithms know where they're sitting. And they're programmed in to go to those strike prices. Why? To create liquidity and volatility. That's all their mandate is. They're not human. They don't care about P&L. Understand that.
Interesting to finish up on, because I know it's a topic I've discussed previously on the podcast, but I haven't for some time. In terms of market makers and hunting stops, there's a big thing in the retail space of like the market makers, like your price hitting your stop loss, then going completely the other way, and
Correct.
people feeling very targeted.
Correct.
And I've heard you say that that is a case. So that is something that does take place.
Oh, 100%. One of the lock trades, as a member of the New York Stock Exchange, that a specialist made, or if you were an agent and had order size flow, is to be on the other side of stop orders. Okay, so conversely speaking, here's another little gimme for you folks out there, retail traders especially. If you're going down to a number and the market is coming down and down and down, and it's you know the algorithms are going to print a number, put an order in 2 ticks underneath the number. Because why? Because you'll wind up being on the assumption is that there are stop orders at those prices. And the assumption is that you will be on the other side of a bad sale. The market is a buy and sell. There's a buyer and seller on every transaction. Somebody's going to be right and somebody's going to be wrong. You want to be on the other side of stop orders. Yes, you're 100% right. You want to be on the other side of stop orders. But it's not easy to identify where those stop orders lie. If you're going to put a stop order to protect yourself again, don't put it at 50 because they're going to get hit. You know, put it at 48. Give yourself a chance. Give yourself a chance to breathe and for the position to be right. Don't put it at 50. You're going to get swept away by some intelligent buy like myself who wants to get long off your mistake.
Richie, I love that. I love that. And I'm sure we could keep going, but thank you for being with us today and sharing so much with us.
My pleasure.
And everyone at home, drop a comment with your biggest takeaway from this episode. There was so much, as always. And the links for Richie will be in the description below. So make sure you check those out as well. There'll be